Stocks to buy now. In this video, I'm going to be covering 3 stocks that I think are significantly undervalued after this market crash and have the ability to 3x, 4x, or even 5x over the next few years. Before we start the video, show some support for the channel and give a thumbs up to this video. I appreciate all the support from everyone, and let's get right into stock number 1. Okay, stock number 1 is Facebook, and I'm sure all of you know Facebook. They own Facebook and Instagram, and they are one of the leading tech companies in the world. Now let's take a look at some of their numbers. The first thing that jumps out to me about Facebook is their balance sheet is as perfect as it can get. They have no debt. They have many more current assets than current liabilities. This is exactly what I want to see a company have in a period like right now where companies aren't earning any money. This is where companies with no debt will thrive because they will be able to survive periods where they're not making any money. Companies that are loaded up on debt and then aren't able to pay their interest because they're not making any money during this period when everything's shut down are going to go bankrupt. And so that's the first thing I like about Facebook. Secondly, they have a strong history of growth. Over the past 5 years, their earnings per share grew at 42% a year. And even though that is expected to slow, earnings over the next 5 years are still expected to grow at 13%, which is still very strong earnings growth for a company like the size of Facebook. In addition, their numbers are outstanding. Return on assets, equity, and investments all over 15%. And they have huge margins, which is something I love to see in a company. Margins like this show that Facebook has a strong competitive advantage and that they are a company that will be here for a very long time. Facebook has recently fallen. They were as high as $220 a couple months ago, and now they are at under $150. And even though you might think that's not a huge drop, the thing that I like about Facebook was that at the top of the market in all of 2019, Facebook was one of the only large cap stocks, in my opinion, that was not massively overvalued compared to everything else. Whenever I looked at large cap stocks, they all seemed to be massively overvalued. But when I looked at Facebook, I saw a stock that continued to be priced at a fair valuation. And so even though Facebook hasn't fallen as much as some of the other companies, this is okay because Facebook wasn't as overvalued as some of the other companies. So I can pull up my Intrinsic Value Calculator here. And this is the spreadsheet that I use to calculate intrinsic value of stocks. And so it's pretty simple to use. All you do is fill in all the white boxes right here. And this is all information you can easily find on Finviz, the website I was just on, or a website like Yahoo Finance. And the spreadsheet will do the calculations for you and come up with an intrinsic value, which is right over here. So according to my calculations, Facebook is worth around $211 currently. And so right now, Facebook is trading at $148. This is a large discount to this intrinsic value and one that you don't see very often with large cap stocks like Facebook. And even though this intrinsic value is $211 now, I think Facebook will continue to have very strong growth in the future. And in the next few years, I could see this intrinsic value going as high as $400. And so I think this is a steal right now for a stock like Facebook, which I believe will be at around $400 in 3 or 4 years. And for that reason, this is one of the stocks I chose to put in this video. Okay, and for stock number 2, we have Gildan Activewear. And a lot of you probably use Gildan, even if you might not realize it. And the thing I love best about Gildan is their business, which is t-shirts. Gildan sells t-shirts and other clothing products, and I just love how simple their business model is. And that is one of the things that attracted me to this stock. Warren Buffett said something like, the best businesses are those which can be run by idiots. And this is a stock that certainly fits that criteria. It's so simple, something like making t-shirts, that pretty much anyone can understand how this business runs and makes money. In addition to that, they have a very shareholder-friendly management team, and their management team has had a reputation for always being honest with their shareholders, which is, again, something I really like. Now, taking a look at some of their numbers, we see that they have a price to free cash flow of around 16, which when I invest in stocks, I like to see this at 10. However, it's still a relatively strong position, and provided that Gildan may drop even more in the future, there's potential for this ratio to go down. In addition, their future growth is expected to be 17%, and so for that reason, their PEG ratio is only at a 0.47, which I've said in previous videos, a PEG under 1 usually signals that a stock is undervalued. In addition, their return on assets, equity, and investment are all strong. And overall, this is just a solid company with a business model that's very simple and easy to understand. Now, taking a look at the price, Gildan was priced as high as $40 last year, and now they're down at $10, which is just a huge drop. And we can go back over to my Intrinsic Value Calculator. And for Gildan, I have the intrinsic value pegged at around $30. And, this is a company that I have a lot of faith in that will bounce back from this crisis we're having. And because of that, I see this $30 number as almost a guaranteed value that the stock will return to in a couple of years. Based on the price now of around $10, this stock would increase by 3 times over the next few years, which would be an amazing opportunity to increase your wealth. Okay, and for the last stock of this video, we have Assurant Group, a private mortgage insurance company out of Bermuda. And this is a company I've had my eyes on for a while just because of the amazing quality business they are. Guys, this is one of the highest quality businesses I've ever seen. Their return on assets, return on equity, and return on investments are all over 15%. They have huge margins, and they are currently trading at a price to free cash flow of 3, which is just insane for a company like this. In addition, they have very little debt, and their earnings per share are expected to grow at a double-digit rate over the next few years. This is why it's better to sometimes hold off investing when you find companies that are overvalued and wait for them to become priced at a more fair valuation. This was a stock I was watching, and as it was at $55, I love this company. And even though I thought that the company was undervalued then at $55, it still wasn't at the price I was willing to pay for it. Now, with a price drop all the way down to $19, this is just a screaming buy. Even though the stock market may drop even more than it has already, I'm waiting for a certain confirmation signal that I use to get back into the markets. I will put a card to that video up now. Even though I think the market might drop even more, I am probably going to start a position right around here, because even if the stock goes lower, this is just a crazy discount for a stock like this to be buying at. And so for financial and mortgage companies, you can't really use a typical intrinsic value calculator based on cash flows. So what we're going to be doing for this company, we will be pulling up the valuation it has traded at in the past. And so here is Assurant Group, and as you can see, they usually trade at around a 15 PE ratio, and right now their PE ratio is at 4. And so as you can see just from this graph, the stock is quite undervalued. And if earnings keep growing the way they're expected to, and the stock returns to that normal PE ratio, this could be a stock that is $100 a share in 2 or 3 years, which is an over 5x increase from $20 where the stock is right now. And so there are no guarantees in the stock market, but buying a stock like this at the price at which it is now is as close to a guarantee as you can get on a way to make very high returns. And that's why I am going to be putting a significant amount of my portfolio into this stock. Now, as always, don't invest in these stocks just based on this video. You must always do your own research, and you should never take investing advice from anyone. But I hope this video gives you an idea on the types of stocks that I'm looking at that have become very undervalued with this recent market crash we've had. If you got something of value from this video, please leave a like and subscribe for more videos like this. I'm going to stay on the lookout for companies that become undervalued, and if they do, I will be posting them on this channel for you all to see. And I hope everyone stays safe out there, and I will see you on the next video. Bye-bye.